Before we start, please note that this video is for educational purposes only and is not intended to be any form of investment advice. Please visit our website www.parallelscapital.com for important disclosure information. In this video, we will review some of the changes happening in the stock market, and we will take a closer look into Parallel's income investment strategy. Let's take a look at the S&P 500 first. When we look at the chart, it's easy to understand why for many years strategies such as buy and hold were very popular. However, since the peak of the dot-com boom, the market has seen incredible volatility and a significant increase in the trading volume. And after more than a decade, the S&P 500 is now close to where it was more than 10 years ago. In order to better understand our approach to the new income investment and how it fits the new normal, let's look now at one of the stocks that we have in our portfolio, and then we'll review the dynamic investment strategy that we are implementing to generate profit. Like most of our stocks in our income portfolio, ETP, or Energy Transfer Partners, is a fairly large organization in a pretty stable industry, and most importantly, the company distributes a really nice dividend, which means that regardless of the market direction, you're likely to receive a nice payout for holding up the stock. However, as with many other dividend stocks, the downside can be a lack of growth potential. So in order to generate profit above and beyond what the stock does, Parallels implements a proprietary trading method. In our strategy, rather than investing in ETP alone, we're looking for a correlated stock that has the same fundamentals and a similar price action. In the case of ETP, we identified another pipeline company, BWP, Boardwalk Pipeline Partners. Just like ETP, BWP is a very large oil and gas pipeline company with a similar market capitalization, and the company also distributes a very nice dividend to their shareholders. When we review the price action of these two stocks together over a long period of time, we're getting a very interesting picture. Despite the volatility, the ups and downs of these two stocks, they are trading in a tandem. When one goes up, the other one follows, and the same thing happens when they go down. A closer look at the chart in a shorter period of time reveals more information about these two stocks and the way they trade. While still keeping very high correlation, the stocks tend to open a gap and then close it after some time, and they do it over and over again. Our software analyzes the correlation between the two stocks, building a trading algorithm that takes advantage of these gaps. So let's review the way it works. If we look at a 6-month period, we'll see that the stocks are now priced at a price close to where they were 6 months ago. So if you were to invest in a typical buy and hold strategy, let's say $10,000 6 months ago, you would have ended up having almost the same amount today, or a little less. So instead of doing that, we will split the investment between the two stocks, and we'll invest $5,000 in BWP and $5,000 in ETP. At this point, when our system recognizes that the stocks are starting to separate out from each other, it will shift money from the overvalued stock to the one that is relatively undervalued. For example, back in August 2011, ETP, the blue line, went up, while BWP, the red line, went down. At this point, the trading system will sell some of the ETP shares, taking profit from the appreciation of the stock, and buy more of the BWP shares that are now relatively undervalued. After a month or so, BWP started to go up, and since we had most of the money invested in BWP, at this point we were able to generate profit from this stock as well. When they crossed each other again in mid-September, the system sold some of the shares of BWP, essentially bringing the holding in the two stocks to the initial position, having half of the investment in BWP and half in ETP. So, while nothing significant changed in the price of the stocks between August to mid-September, by shifting the money from one stock to another based on their relative value, we were able to make a profit. Similar trades happened multiple times during this period. So by the end of the 6 months, investment in the pair using our system would have resulted in a more than 5.5% profit, while just buying and holding the stock over this period would have resulted in a small loss of 0.5%. That's a 6% difference in just 6 months. To summarize, the income portfolio includes more than 20 pairs of large capital, high-yield dividend stocks, primarily from stable industries. By implementing our proprietary trading system, we're benefiting from the volatility in the marketplace. In the example of the pair ETP and BWP, we were able to generate about a 6% incremental profit in just 6 months. In addition to the pair trading system, we're implementing a dynamic protection strategy in each one of the portfolios to reduce risk in the case of a market decline. To learn more about our pair trading approach, try our simulator and visit our research center. You can always contact us at support@parallelscapital.com. Parallels Capital.